Good morning, everyone. Welcome to Admiral Markets. My name is Chris, and today we're going to take a look at, of course, the markets, the stock markets, the commodity markets, the forex markets. There's a lot of things happening right now. A lot of things that happened in the last few hours as the U.S. elections are taking place. So, as expected, a lot of movement there. And as I talked about that on Monday, we'll review what is happening right now. But as we stand at this very moment, just a few minutes ago, apparently Clinton has called Trump to concede the election. Trump is on the stage right now, probably going to have a victory speech very soon. So it is a big political event. It is a big political change, one that was not expected beforehand. Clinton was expected to win. There was, different percentages mentioned, 65 up to somehow even close to 100, which of course doesn't seem too realistic, especially now, but up in the 90s. But I think most realistic forecasts were 65 to 85%. So this is unexpected, and Trump managed to steal away some states that Clinton, seemed solid in, like the Midwest. So that was the big game changer there that lifted Trump to gain enough electoral votes to make the win. So dollar is reacting, stock market's reacting, emerging markets are reacting, Mexican peso is reacting, as you can imagine. If you want to follow more information, at Chris Forsek, at Admiral Markets for Twitter. Before we take a look at the markets, though, please be aware that this webinar is shown to a global audience but may not be suitable for everyone. Please visit admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity for more info. Also, be aware that trading for exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more info on that. Please be aware that by continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. This webinar is for informational and educational purposes only. All right, so with that said, let's head over here to the markets and take a look at what is going on right now. There was a lot of reactions. I got up early. I got up just a bit after 2 a.m. It was something like 2:15 Central European time. At that point, it seemed like Clinton was, I guess, on course. Nothing shocking happened. But the first clue was when Virginia started to be shaken, North Carolina. There started to be more and more results coming in. That Florida seemed in the bag for Trump. New Hampshire, if I remember correctly, Ohio. And then the big hit came with the Midwestern states. And then drastically, the percentages started to change. Around 3:30, about 1 hour after I had my first coffee, Trump crossed the 50% line, started to go to the 60, and then between 3:30 and 4:30 my time, I think it was 4:30 and 5:30 my time, the odds dramatically shifted from 60 to above 95%, and eventually just was not able to stop it. In the meantime, Trump is addressing his crowd right now at 2:50 a.m. Eastern Time in New York City at his headquarters. Clinton will not speak tonight, by the way. She already addressed that. There were still some states like Wisconsin, like Michigan, that were very close. The percentages in these states and Pennsylvania, I think, are in some cases within a percent. Ultimately, a percent is really a very small margin. Those states could have gone. The thinking was that the states could have gone still to Clinton. Ultimately, they didn't, or at least Wisconsin didn't, and Pennsylvania didn't, which is why we're having that speech right now. Regarding the financial markets here, what we're seeing was a big reaction on the euro dollar. If we look at the 5-minute chart here, for instance, you can see that price hit the 50 fib. Now, of course, that's not necessarily the reason why it jumped. The political event probably was the main reason, and it started to rise and rise and rise throughout the whole election night. Now it's making a bit of a dip. I guess that not sure why it's making this dip at the time. It was a substantial move, 300 pips, definitely a good bounce. It's not something earth-shocking considering the political event that we're seeing unfold right now, considering the upset, I would say. Financial markets were pricing in a Clinton win as far as all the financial experts are saying. So we see, basically a zigzag here. Now, I was not surprised about the zigzag. Technically, I thought the zigzag was about to take place. What I thought could have happened was that we get upside as Trump, was doing better than expected, but then maybe still downside as then Clinton still kind of clinches the victory at the end. Well, that didn't happen, of course, obviously. But we're still seeing the downside as prices reaching these fib targets. Now, how much can we really rely on these technicals? I don't know. It's a big political event. It's still ongoing. I think it's difficult today, at least for the next few hours. It could be a wild ride, depending on how things go. I think got to see some things settle down before probably that could occur. But looking at this daily candle, it's going to be important too. That could be maybe from a technical point of view the best first step. Looking at this daily candle, is the daily candle close near the high? Is it a few pips away? Is it within 10%? Is it within 20%? Is the close that close to the high? Then the bulls are in control, and I would expect some upside on the euro dollar to continue. In the bigger picture, basically, what we're looking at is, in my opinion, a wave E. So let's take a look at this. This is the fib on the last wave D swing, right? Price is hitting this big fib range that I expect it to be a turning spot. Will it be a turning spot? I don't know. I guess today's candle will say a lot. If today's candle's close is near the high, I don't think so. I think it will march on and probably move on to the 78.6 fib and bully past or march past the 61.8. All right. But if there's a big wick here or a substantial wick, I'm not sure. It shows indecision. I would expect dollar weakness with the Trump victory as we've seen so far, right? Is that it, or will there be more? I think today's candle will be give us some information on that. All right. Pound dollar's been moving up, but same story, retracing. Dollar yen moved a lot more, about 450 pips. Now it's seeing a bounce too at this moment. We see commodities weaken like oil, but that's getting a bounce. We're seeing basically a retracement on all of them. Gold was moving up, but it's retracing. Silver, same thing. S&P, pretty nasty fall too. I'm not sure what the percentage is exactly, but the fall in terms of points, going from 2160 to 2030-ish or so, now getting a bounce too. So I think this may be a bit of a relief rally, dead cat bounce, but the dead cat bounce is going a bit higher, let's say, or is retracing a bit further than I would have expected. So, reaction set aside, folks. It's a tough environment. I would expect dollar to weaken personally. So, it depends on everyone's personal risk profile, on their own risk attitude and their own risk appetite. If that person is trading today or waiting for today to end and looking at the bigger picture, that's for everyone's judgment, obviously. I'm a bit surprised about how the euro dollar is retracing now strongly to the downside. I would expect personally a bit of a bounce here for the dollar to weaken again, at least to test these tops, if not make a higher high. It doesn't seem to be doing that right now. 5-minute chart is showing a bearish impulse. Let's see how far that could retrace. Support levels, looking at these strong candles, there is a lot of momentum to the downside at the moment, surprisingly. A lot of momentum to the upside too, not to the downside. I guess that, if this holds this hourly, I would expect some push through. I guess maybe looking for some hourly bounce, some hourly wick, some hourly pin bar here, or 5 to 6 candles, maybe not breaking the low, and we might see, in that case, from a technical point of view, a rally. But once again, are technicals the most important thing in this current environment? Well, maybe not, right? So, but technically, that was what I would be thinking about, looking for that bounce to the upside. If we get 1-hour charts, basically, to maybe show some pin bar reaction, as price basically almost erases all the gains it had to the upside. Dollar Mexican, peso, not surprisingly moving to the upside, going up from 18 above 20. That's not surprising, of course, and not shocking at all. Dollar index moving down. So that's about it. If I mean, from the initial reaction point of view, if you weren't aware of that already, of course, I'm sure you were, but as we're just talking together here. So let's see if there are any questions. Hi, Alex. Good to see you. Any questions at this moment? Who in here, just to get a bit of a poll, I know there are not a ton of people here. Probably not many are interested in trading, I guess, today, which I can understand. But of those that are here, for who is this kind of a surprise? For whom is this like, well, it's not that surprising, maybe, like, or kind of like, well, could have seen that, you know? So write an S for surprise and an N for not surprised. All right, let's make a quick poll here. Not many people here, so I'm not expecting a representative, let's say, mathematical consensus of what the world is thinking. But we got a diverse global presence here. So let's see what our small world is thinking. So yeah, we see two surprises so far, 2-0 at this moment. So if you still want to weigh in, S for surprise, and for not so surprised or not so shocked or I expected it. Any of that falls into the letter N, not, and the S for surprised. Alex is saying, I'm surprised the dollar is reversing. Yeah, me too, actually. I am not sure where it's coming from. This could be a retracement, but the retracement is quite impulsive. It's quite quick. It has a lot of momentum. So I would expect to bounce to the upside, but I'm not holding my breath necessarily for those technicals to emerge, especially in this kind of environment with political speeches and still some votes out there, although those will not shift that landscape. Otherwise, Clinton would not have called Trump to congratulate him. I would not have told Trump that she's not said she expects him to win. So obviously he has a winning speech. So I guess that apparently Florida. No, sorry, I'm looking at CNN at the moment to keep you up to date. Apparently the math doesn't allow Clinton to win anymore, obviously. So anyhow, Eurodollar showed a strong hourly candle. So looking at these two strong hourly candles, I'm sitting on the sidelines at the moment regarding the dollar. A bit surprised to hear about that. But I guess for any bounce up, I would need to see a strong bullish pin bar or a 5 to 6 candle failure to break and set a lower low. That's just technically speaking. So yeah, let's see how that reacts. I mean, that's the hourly perspective. 5-minute chart, I like my time factor rule on a 5-minute chart too sometimes, but I don't think that would be maybe the best moment right now. It could work out, but big emphasis on could. So not too sure about that. Dollar yen is making a pretty strong rebound. Ironically, it is the 78.6 fib that is holding. The 50 fib broke. Sorry, the 50 fib bounced. The 61.8 broke. The 78.6 fib is holding. What else to say? I don't know. It is a big surprise, absolutely. And apparently what the polls didn't show, at least in those Midwestern states, was, let's say, the hidden Trump vote. They didn't capture the entire undecided voters. There were a lot of undecided voters out there too that probably walked to the polls in some cases and did not know what to vote. If you looked at the polls before, 45 to 42, that means a large group, 13%, were not sure yet what to vote. Enough of them voted on Trump or did not vote, apparently, or whatever the combination was, that Trump managed to squeeze by a few percent, like in Pennsylvania and in Wisconsin, where I think Michigan, I think the margins were very close. So that is a surprise for the the Democrats, the establishment, political establishment, but also the pollsters. Um, that was not basically, I think, expected, right? So, well, it's the markets, I think, past beyond today, um, it could be a bumpy road. We'll have to see regarding the stocks. Emerging markets, I think, will be certainly, I expect to be heavily under pressure, emerging markets, because of the anti-trade ideas, or at least the skepticism that Trump has shown regarding that. Stock markets, I think, let's take a look at the stock market right now. It also depends on the close, how bearish would the close be near the low. That remains to be seen today. I would expect some more bearishness, generally speaking, but a lot will be said, a lot can be seen from looking at today's candle and this weekly candle as well. And then the market is, after this initial shock, initial adjustment, this initial price reaction to the news, I guess we're starting from kind of a new sheet in the sense that there's still 2 months before Trump will start. So I guess the market is going to test how kind of Trump's standing is, how he holds himself, what he says, what his policies are going to be, who is he going to choose in his government, and it's gonna weigh that all in, and that's information, I guess, that is uncertain and is difficult to make a prediction on at the moment, I would say. My humble opinion, at least. Now, Ned and I are going to write a new article on the U.S. elections as a special, and I think that's going to be ready Friday, probably. So we'll discuss that in more depth as well. But yeah, that's a big question mark at the moment. It's certainly an environment with uncertainty, I think, at this point. Just to see how the markets respond to this political shift. So, but emerging markets, I think, will remain under pressure. Stock market, I think, generally speaking, could see some bearishness. Commodities too, dollar too, right? The exact details, good question. I don't know, really. But I do think that a lot can be seen from technical point of view about today's candle close, or at least something, right? Today's candle close, this week's candle close. And we can see how the market is reacting to these developments and these events. So, yeah, I mean, that's really it. That's my view at this moment. I don't have much to add at this point. Pretty straightforward uncertainty at this point. So I'm laughing because I just don't want to repeat myself too many times, but that seems to be the main message. We could keep an eye on these hourly candles on the S&P 500 too. Two strong candles. It's exact mirror kind of response to the euro dollar, right? So you're seeing a sub bounce here. I still favor the dead cat bounce here, but the dead cat bounce, for those that do not know, dead cat bounce is when there was a strong move and there's a bit of kind of a bounce after that strong move. But am I certain? No. And is it going to happen? I'm not sure. So let's see. All right, folks. Well, it is up to you. Do you have any questions? We could take a look at some crosses maybe. Pound yen showing some downside too as the yen was weakening. Kiwi, everything is really moving as expected here. Euro pound found some upside. Euro moving a bit more than the pound. Not so surprising. What is surprising to me is this euro odd upside that strongly, but a pretty big wick as well at this moment. Yeah, we can take a look at the metals. Indeed, good idea. Gold, well, upside. It was, and I was already warning you guys of my and girls of my shift in analysis because I was bearish on gold when price was still below the 38.2 fib. It was corrective, but once it broke above that fib and it started to move with impulse, this was still corrective. But this part really changed my mind. The impulse after and breaking above 38.2 fib made me think that a bigger correction that this downside correction was over basically, right? And that a bigger upside was possible. And indeed, on the dip, we got the upside, and gold is moving there. So I'll take away this fib here too. I don't want to be repetitive, but today's candle could indicate some good info there. But this is, I think, pretty bullish environment at this moment. And if there is a good daily candle close today, then near the high, then this trend line could be toast, and price could push above it in the remainder of their week. Until that moment, I would say that this is also moving less impulsively. Do you see that? Then on the dollar yen, then on the euro dollar. So maybe this is showing maybe more potential for a bounce. It is below the 38.2 fib, but the 50 fib could be maybe an interesting spot. It's close to 1300, even around psychological level, and it's a 50 halfway move, 50 fib. So that could be something maybe to keep an eye on as well. Is a bounce. It looks more like an ABC zigzag here too. I don't have the Oscillor on it, but certainly looks that that it could be so. That there could be some divergence. Maybe not really certain yet. I guess it could be so, but time will tell. It's at the moment, if it bounces at the 50 fib, it does look like an ABC zigzag to me. But that certainly partly depends on whether it's going to bounce at the 50 fib. All right, so yeah, we have to see how this political landscape shift proves itself out for the U.S. That's going to be important because, well, the Republicans obviously then, because Trump won, kept control of the Senate and the House, so they have basically a workable, manageable government, so they can start implementing things that they want, as far as I understand, from a political point of view. So there will be no gridlock in that point. The Fed, what will the Fed do? With that uncertainty in the market, I probably, as Ned and I explained, are not expecting a Fed or rate hike in December. Not this year. That's our expectations. Let's see if it happens. That would be another kind of reason why the dollar might weaken or at least not strengthen. What else to discuss? Yeah, basically, I think that from a political point of view, Trump is going to have to, I think, show that he can be the president for the entire U.S. You got a very heated debate, a very divisive presidency race, one where both sides mistrusted each other immensely. So I think that was a challenge already beforehand that I thought was very daunting and a very big challenge for whoever would win. That still remains the same. So that could be, it could be politically turbulent, I would say, not only now, but in the next years. 4 years from now, the Democrats, I think, are really going to need to rethink their strategy. Obviously, their strategy failed. They lost. And if you look at political commentaries, there are a lot of reasons potentially for that. I don't want to dive into that. That's not, it's not the place here. but it's obvious that the Democrats are going to have to, as a party, really have to going to put their heads together and rethink what went wrong, what can they learn from that going forward. So that's the political side. But the financial side, as I said already before, uncertainty. I don't think the Fed will hike the rate. Hike the rate, interest rate. Eventually, though, there could be, this uncertainty could kind of stabilize a bit as the markets kind of transfer or move into a new kind of era, and things could kind of like stabilize a bit. And after initial reaction, downside reaction on the stock market, there could be some bounces as well to be seen. I wouldn't be surprised that maybe eventually we could see a triangle form or something like that. Let's take a look at that. Let's say today's candle close is near the low. Tomorrow we see one more daily candle like this, and then maybe a doji or something like that. I'm just speculating here. Let's take a look at the weekly chart. So something like this. I wouldn't be surprised then to see like this, and then maybe like this, and this happen as there's kind of maybe a correction like that, a triangle correction. The other alternative could be a zigzag like that, more depth to the downside. Alternatively, I'm just thinking all scenarios is that there's a big wick here, and the shock is the initial reaction is not as big as expected, as we expected as well, and as other people were thinking. And if there's a wick like this, who knows? Maybe there's some bullish triangle and a bullish break. That would be the least likely scenario, but I'm just running through all the kind of things that we could expect. If there's a big wick like that, then tomorrow is a bullish candle for whatever reason. I'm not expecting that, but you never know how the markets react in a way, especially with politics like this. There could be maybe some upside break. Maybe this was all of the bearish correction. In that case, that would be true, right? Not expecting that at the moment, but if we do get that, then apparently that was it. Now, still, I don't think that is the most likely case, as you can imagine, looking at this initial reaction, but time will tell. All right, folks. Well, I think we'll wrap it up at that point. If you have any questions, now would be the moment. Otherwise, we will also discuss more, scenarios with a better potential to look at new information tomorrow. Why? We'll have a webinar scheduled tomorrow at 6 p.m. Central European Time. There's going to be this webinar here. You can go to admiralmarkets.com/education, go to Forex and CFD webinars. Here you have it, expected impact of the U.S. president on financial markets. We'll have a bit more info by then. And I'm going to run through all the scenarios, discuss our forecast, discuss other forecasts, and more in this webinar starting 5 p.m. GMT time. So hope to see you in that webinar. And I don't see any questions. So, all right. So let's keep in touch. Twitter at Chris Forsick, at Admiral Markets, of course, in the meantime. And be careful, trade safe. Still, kind of volatile environment. Be aware of that. And well, have a great day and talk to you soon, folks. Cheers.